Good morning, students. I'm Dr. Alka Singh. Today I'm going to take a very simple topic, that is leasing and hire purchase. This is related to your fourth unit. Today is 8th April 2020, and my lecture will be very brief, but I think it will be good to increase your knowledge. I will share also other PPTs related to other speakers which you can go through. So when we start with the leasing is basically it's a contract where by the owner of the asset, that is lessor, grant to another party, lessee, the exclusive right to use the asset, usually for the agreed period of time in return for the payment of rent. In other words, we may say that leasing is distinguished from most other form of finance by the act that the financer, the person who is lessor, is the legal owner of the leased asset. The asset used, the person who is using is known as lessee, obtain the right to use the asset in return for the periodic payment, which is also known as lease rent, to the lessor. That means there is three more most important thing in the leasing. One is lessor, a person who is basically owner of the asset. Second, the person who is using that asset. And third, the person who is using the asset is paying the rent, is known as concept, definition. And when we go more in detail about the concept, we can say that lease finance donate procurement of asset through lease. Leasing is a financing concept, is an agreement between two parties. The leasing contract or leasing company, that means lessor, and the use or lessee. The rental are predetermined and payable at the fixed interval of time according to the mutual convenience of both the party. However, the lessor remains the owner of the equipment over the primary period. That means the person who is the owner of the asset, that name is lessor, is remain owner of the asset throughout the life of the asset. In India, the concept was pioneered in 1973 when first leasing company was set up in Madras, and the 80s and the 80s has been rapid growth of business. The lease contract basically has a party owning asset, that is lessor, provides an asset for use to another party, that is lessee, and for an agreed period of time, that is lease period, for the consideration, that is lease rental. So when we say that leasing is nothing that you get the right to use the asset which is not your. You pay rental on using the asset, and the owner is known as lessor. He basically charge rent from lessee. When we see the definition, it is just a simple definition. A lease is a form of contract transferring the use or occupancy of, not occupy, sorry, occupancy of land, space, structure or equipment in consideration of a payment, usually in the form of rent. Leasing is an important source of finance for the lessee. Leasing company finance for modernization of business, balancing equipment, cars or other vehicle and durables, items entitled to 100% or 50% depreciation, assets which are not being financed by bank or institution, are basically the reason for the lease. Marketing of leasing is done by the financing many kind of asset to consumers as well as business, which includes plant and machinery, business cars, commercial vehicles, agriculture equipments, hotel equipments, medical, dental equipments, computer including software packages, other equipments, uh, basically anything which is demanded by the lessee, and it is marketable or it is legal, can be leased. uh, Lease financing organization in India basically are NBFCs, private sector manufacturing companies, infrastructure leasing and financial service limited, ICICI Bank, HDFC Banks, LIC, Industrial Reconstruction Bank of India, state industrial investment corporations. uh, if we see the origin of the lease, origin was far back 200 BC, when there was evidence that at that time also leasing was prominent. Romans had developed a full body law relating to lease for movable and immovable properties. Modern leasing appears first time in 1877 when Bell Telephone Company begins renting telephone in the USA. Since World War II, the use of leasing has been greatly expanded, and it is constantly used for new product and new industries. Henry Schauffele set up US Leasing Corporation with the capital of $20,000 in May 1952. The concept of lease financing was pioneered in India, as I have already told you. During 1973, first company was set up by the Chitambram Group in 1973. When we talk about the types of leasing, there are basically five or six types. There are basically six types. First is financing lease, operating lease, leverage lease, cross-border lease, vendor leasing, and wet and dry lease. Uh, when we talk about different types, finance lease is nothing but it is just a long-term non-cancelable lease contract. For example, plant, machinery, building. And when we talk about operating lease, this is related to short-term cancelable lease agreement. For example, tourists renting car, hotel rooms, etc. When we talk about leverage lease, a leverage lease is used for financing those assets which requires huge capital outsource, like 50 lakhs to 2 crores. Asset has economic value of 10 years or more. The lessor acquires the asset as per the terms of the lease agreement but finance only a part of the total investment, say 20% or 50%. When we talk about sale and lease back, this is again a type of lease, special financial agreement in which the user may sell an asset owned by him to the lessor and lease it back from him. For example, shipping industry. What I'm trying to tell you, that asset owned by him to the lessor and lease it back, like lessor purchases the asset which is sold to the lessor, and lessor lease it to the lessee. The person who was the original owner of the asset takes it as a lease. This is the sale and lease back. When we talk about the cross-border lease, a vendor leasing is one where the retail vendor ties up with the lease finance company which gives financing option to the consumers, to the vendor to purchase a product. This type of lease is popular to auto finance like vendor leasing, wet lease and dry lease. When we talk about the merit of leasing, of course, leasing is convenience in case of short-term need, no risk of technology obsolescence, efficient maintenance service, low administration and we can say transaction cost, debt equity ratio remains unchanged, benefit of tax shield. But when we talk about demerits, of course, there are some demerits also. No benefit of residual values, high cost of lease, no benefit of ownership, no flexibility, and of course, chance of dispute. Now, this was a little literature related to leasing. Now, I am going to discuss about the hire purchase. A hire purchase is a type of installment credit under which the hire purchase, called the hirer, agrees to take the good on hire at a stated rental, which is inclusive of the payment of principal as well as interest, with the option of purchase at the end. Uh, as name suggests, hire and purchase. First we will hire it on rent and will pay the principal as well as interest completely, and after that it will be purchased. Hire purchase is usually to buy expensive item which a person cannot afford to pay back, right? For example, a car, the ownership or title of the same is transferred only when the last installment is paid. So, if we see the features of the hire purchase, it is credit purchase. Second feature is installment payment. Third, possession at the time of agreement. Ownership till last installment. Termination of the agreement. Ownership of good after all installment is paid. Uh, in a simple language, we can say that in hire purchase, a person first will hire the asset who will be hiring from the hirer, and this asset will remain as lease till he will pay the last rent as well as principal plus interest of that particular asset, and when he will pay all the dues, then that product or asset will be considered his property. So, in lease, if we say that we don't allow lessee to be the owner at the end, but here in hire purchase, the person who is hiring, who is taking the asset, will be the owner at the end. When we take the simple definition of the hire purchase, we can say that there is ownership transfer at the end in the hire purchase, and in lease there is no ownership transfer at the end. There are two types basically hire purchase. One is consumer hire purchase, and second is industrial hire purchase. Advantage of hire purchase is spread the cost of finance. Basically, products are very costly, which in one go is not advisable as well as not affordable to purchase. So the person who want it on rent, he takes it in rent and slowly he pays off all the dues and interest. After that, he becomes the owner of the product. Spread the cost of finance, interest-free credit, higher acceptance rate, sale, debt solution. These are the advantages, but definitely there are some disadvantages also, like personal debt, final payment, bad credit, and of course you are not having right till you will not pay the complete dues. Now, if we talk about the difference between the leasing as well as hire purchase, if we take the first uh, uh, difference on the first particular ownership, of course, leasing ownership lies with the lessor. The lessee has the right to use the equipment and does not have an option to purchase. But in hire purchase, the hirer has the option to purchase. The hirer becomes the owner of the asset equipment immediately after the installment is paid. Depreciation, when we talk about depreciation, the depreciation is claimed as an expenses in the book of lessor. Here, depreciation claim is allowed to the hirer. Hirer is a person who gives asset on the rent. Rental payment, when we talk about in lease, the rental cover the cost of using an asset. Normally, it is derived with the cost of an asset over the asset life. But in hire purchase, the installment is inclusive of the principal amount and the interest for the time period the asset is utilized. When we talk about the duration in lease agreements are generally done for a longer duration and for a bigger asset like land, properties, etc. But in purchase, these agreements are done mostly for shorter duration and cheaper asset like hiring a car, machinery, etc. When we talk about tax impact, in leasing, the total lease rent are shown as the expenditure by the lessee in the lease agreement. In hire purchase, the hirer claims the depreciation of asset as an expenses. When we talk about repair and maintenance, in lease, repair and maintenance of asset is financial lease is the responsibility of lessee, but the operating lease it is responsibility of lessor. And in hire purchase, the responsibility lies with the hirer. When we talk about ownership, transfer of ownership in lease, when in hire purchase, transfer of ownership take place after the payment of all installment. But in case of installment payment system, the ownership is transferred immediately at the time of agreement. But in leasing, there is no transfer of ownership. The contract, when we talk about the contract, the hire purchase contract is like contract of hire, though later on it may become a purchase after the payment of last installment. But in lease, it will remain as a contract between two parties and asset will go back after the period is over. So these are the difference which I have tried to tell you. I have covered what is lease, what is hire purchase, what are the concept, definitions, and difference between the hire purchase and lease, types of hire purchase and lease. I hope you understood the topic, and with this, I am looking forward assignment on this topic. And good luck. Thank you so much, student. And after listening my lecture, you can ask me some questions also. Thank you so much.